Close your eyes for a second and picture a successful investor. What do you see? If you are like most people, you probably picture a guy in a tailored suit on Wall Street, staring at 6 computer monitors filled with flashing red and green numbers. You picture someone shouting into a phone, obsessively reading the financial news, and trading stocks at the speed of light. Society has conditioned us to believe that investing is a high-stress, high-stakes game. We are taught that to make big money, you must dedicate your entire life to watching the markets. But what if I told you that the most successful investors in the world share a completely different secret? What if I told you that when financial institutions look at their data, the accounts with the highest returns often belong to people who forgot their passwords or people who are literally dead? It sounds like a joke, but it is a profound financial truth. Activity destroys wealth. Patience creates it. Today, I'm going to show you why doing absolutely nothing is the ultimate investing superpower. We are going to build what I call the lazy portfolio. Ready to build your passive income fortress? Hit the subscribe button and let's rewrite your financial story. And to understand how this works, I want to tell you the story of Sarah. Sarah was a brilliant, hardworking architect. 5 years ago, she had finally saved up $100,000. She knew leaving it in the bank was a mistake. She had learned about the silent thief of inflation and the 8th wonder of compound interest. So, she decided to become an investor. But Sarah made the same mistake that 90% of beginners make. She thought she had to be the Wolf of Wall Street. She opened a brokerage account and started picking individual stocks. She bought a trendy electric vehicle company because her friend recommended it. She bought an airline stock because she thought it would bounce back. She bought a tech startup because the CEO sounded smart on a podcast. For the first few months, she felt like a genius. The market went up and she made a quick $5,000. But then, the reality of the stock market hit her. The tech startup missed its earnings report and the stock crashed 30% in a single day. The airline faced a scandal and her investment was cut in half. Suddenly, investing wasn't fun anymore. It was a nightmare. Sarah's life changed. Instead of designing beautiful buildings, she spent her lunch breaks hiding in the bathroom, frantically checking her portfolio on her phone. She couldn't sleep. Her mood depended entirely on whether the market was red or green that day. She was stressed, anxious, and worst of all, after a year of obsessive trading, she had actually lost money. She had created a second, unpaid job for herself that was destroying her mental health. One evening, exhausted and defeated, she met with an older, retired colleague named Marcus. Marcus had been an architect on a modest salary, but he drove a nice car, took 4 vacations a year, and never seemed stressed about money. Sarah poured her heart out to him. She explained her stock-picking strategy and her losses. Marcus listened quietly, took a sip of his coffee, and smiled. "Sarah," he said, "you are trying to find the needle in the haystack. It is exhausting, and usually, you just end up pricking your finger." Sarah looked confused. "So what should I do? Pay a financial advisor to find the needle for me?" Marcus shook his head. "No, stop looking for the needle. Just buy the entire haystack. Are you already investing in ETFs or just getting started? Drop your comment below so we can discuss it." That was the exact moment Sarah discovered the power of ETFs, exchange-traded funds. Marcus explained that an ETF is like a magical basket. Instead of betting all your money on one company, an ETF allows you to buy tiny pieces of hundreds or even thousands of the best companies in the world with a single click. If one company goes bankrupt, you barely feel it because the others carry the weight. It is the ultimate shield against disaster. Marcus introduced her to the concept of the lazy portfolio. A portfolio so simple, so robust, and so automated that you only need to check it once a year. He told her she only needed 3 baskets, 3 ETFs to own forever. The first basket is the engine. It is the core of the portfolio, designed to capture the relentless growth of the American economy. For this, Sarah chose an ETF called VOO. This is the Vanguard S&P 500 ETF. When you buy 1 share of VOO, you are instantly becoming a part owner of the 500 largest, most profitable companies in the United States. You own a piece of Apple, Amazon, Google, Microsoft, Johnson & Johnson, and Visa. You have the greatest CEOs in the world waking up every morning, working relentlessly to increase the value of your shares. The S&P 500 has survived world wars, recessions, pandemics, and political crises. It always recovers and it always pushes higher. It is the undisputed heavyweight champion of wealth creation. Sarah put 50% of her money into this engine. It gave her peace of mind, knowing that as long as people keep buying coffee, using smartphones, and ordering packages online, she would be making money. The second basket is the cash machine. This basket isn't just about growth. It is about getting paid in cold, hard cash while you sleep. For this, Sarah chose an ETF called SCHD, the Schwab US Dividend Equity ETF. This basket is filled with about 100 companies that have a proven history of paying and growing their dividends year after year. These are the boring, everyday companies, the ones that sell toothpaste, tractors, soft drinks, and medicine. They might not make front-page news, but they are incredibly profitable. When you own SCHD, these companies take a portion of their profits and deposit it directly into your account every 3 months. It is entirely passive income. You don't have to work for it. You don't have to sell your shares to get it. Sarah loved this. She put 30% of her money into SCHD. She visualized this basket as a golden goose that laid eggs every quarter. She didn't care if the stock market went down for a month because she knew those dividend checks were still going to hit her bank account, rain or shine. The final basket is the accelerator. This is the part of the portfolio designed to capture the explosive innovation of the future. For this, she chose an ETF called QQQM. This ETF tracks the NASDAQ 100, which is heavily focused on the most innovative technology companies in the world. It captures the pioneers of artificial intelligence, cloud computing, biotechnology, and semiconductors. These are the companies that are changing the way human beings live and interact with the world. Because it is focused on technology, this basket is a little more volatile. It jumps higher, but it can also fall faster. However, over the long term, it has historically crushed the broader market. Sarah put her remaining 20% into this accelerator. It was her ticket to the future. So, Sarah restructured her entire financial life. She sold all her individual, stressful stocks. She took her $100,000 and divided it. $50,000 into VU, $30,000 into SCHD, and $20,000 into QQQM. She set her account to automatically reinvest all the dividends. And then, she did the hardest thing for any investor to do. She deleted the investing app from her phone. She walked away. She went back to designing beautiful buildings. She went back to sleeping 8 hours a night. She became gloriously, incredibly lazy. Let's fast forward 5 years to today. Over the last 5 years, the world was not peaceful. We had a global supply chain crisis. We had historic inflation. In 2022, the stock market actually crashed, dropping over 20%. If Sarah had been checking her phone, she might have panicked and sold everything in fear. But she was lazy. She did nothing. She let the storm pass over her. Because she held on, she captured the massive recovery that followed. Let's look at the numbers. Her $50,000 in VOO grew by nearly 85%, turning into over $92,000. Her $20,000 in the tech-heavy QQQM more than doubled, rocketing past $42,000. And her $30,000 in SCHD grew steadily to about $45,000. While quietly paying her thousands and thousands of dollars in cash dividends along the way, which were automatically used to buy even more shares. In just 5 years, through a market crash and a recovery, Sarah's $100,000 transformed into over $179,000. She made almost $80,000 in profit. And how many hours did she spend analyzing charts? 0. How many CEO interviews did she watch? 0. How many sleepless nights did she suffer? 0. Sarah realized that the true power of the lazy portfolio wasn't just the financial return, it was the return on her time. She bought her freedom back from the screens. She understood that investing shouldn't be a source of anxiety, it should be a source of quiet confidence. She went from being a stressed-out speculator to a calm, wealthy owner. This is the secret the financial industry doesn't want you to know. They want you to trade. They want you to panic. They want you to pay them high fees to manage your money. But you don't need them. You just need a strategy, a few good ETFs, and the discipline to let time do the heavy lifting. The market is a device for transferring money from the impatient to the patient. If you are tired of the noise, if you are tired of trying to guess which stock will be the next big thing, maybe it is time to stop playing their game. Maybe it is time to buy the haystack. Ready to live off dividends? Click the next video to discover top dividend and growth ETFs right now.